One final one from John O'Dell.
For the other two panelists, Annalise, you said at your first answer to your first question that in the reevaluation in 2015, 2016, that the thinking is not that you would be reevaluating or reevaluating the technologies, but rather what the government of California might be able to do to continue or increase public acceptance thereof. I'd like to hear from the other two about whether they think that's a viable way to go. If by 2015 we're not seeing consumer acceptance in any greater degree than we are right now of these vehicles.
So I'll start. You know, CAFE standards and the updated CAFE standards are going to go a long way in pushing advanced internal combustion engine and other technologies down the road. However, I mean, hybrids, for the most part right now, will save consumers money depending on their assumptions of what's valuable to them and how much they think gas prices are going to be. But we still see those as a, and as Jeremy was showing, a smaller segment of the marketplace. And there are a real policy option to incentivize hybrids, even though consumers should already be buying them anyway. But if they're not buying them because of perceived technology risk or other functionality issues, there are policies and subsidies or tax credits or other types of incentives for existing hybrids that could push that marketplace further within that interim time period and probably reduce a lot more oil and GHGs.
I think, let me throw out a hypothesis though. So we're starting to think about the midterm, and I do think that the market share, market acceptance of all of these advanced powertrain vehicles is going to continue to grow. So I don't think under almost any scenario it's going to stay at today's levels. But I also would throw out there a caution, and this is sort of a thought experiment. It occurs to me that and we looked at the data, I mean, the sale of these vehicles and other small, more fuel-efficient vehicles is highly tied to gasoline prices. And it's arguable that there's a 50-50 chance that 5 years from now, gas prices could actually be quite a bit lower than they are today. I think we need to at least be open to that as a possibility. It's kind of one of the paradoxes out there, and that is that the greater the belief that gas prices are going to climb in the future, the less likely that actually is, because individuals acting to create, gas companies looking to create their individual advantage are making plans based on that expectation that gas prices are going to be higher, and they explore more diligently, they invest in new refining technology, new extraction technology, and all of a sudden you see there's a lot more gas out there than we might have thought, and gas prices actually are quite a bit less. We saw this happen in the 70s where everybody thought gas prices were going to continue to climb, and in the 80s they kind of collapsed. So it's not clear to me that as we start thinking about the latter part of this decade that fuel prices are actually going to be helpful in this regard. They could be actually one of the reasons that's kind of keeping back market acceptance for these vehicles. And that's the kind of scenario I think that you have to kind of think through. What if gas prices are quite a bit less? How many more incentives, rebates, whatever can you put on these vehicles? They actually create a bit of a stigma after a while, so they're not panaceas. It's a real tricky kind of a conundrum. And sort of the obvious answer, and I think you talked about it, we should talk about it some more, is how do you actually harness market forces, probably with a gas tax, to better align human decision-making with desired outcomes? Because I think we're kind of dancing around that, and it seems to be the most obvious answer. It's not a 20 cents per gallon tax, it's more like $3 or $4 per gallon, which might be politically difficult, but politics isn't meant to be easy, right? And somehow they're doing it in other parts of the world, and you're seeing behaviors change in other parts of the world that we haven't seen in the United States. So I don't know if anybody wants to take off on that one, but I think that's at least something that ought to be considered.
I guess we'll take a couple more here.
Sure. Yes, I'm curious about whether or not the wants and needs of car enthusiasts are relevant to these plans and the future. In other words, are the car collectors, the racers, the performance enthusiasts, the nostalgia buffs, are they a necessary casualty of the move that we must make in order to move ahead?
I don't think so. I really don't think so. I'm trying to think how to answer that. While my graph up there showed the vast majority of vehicles being zero emission, it didn't show 100%. But I also want to counter that with the experience that we've noticed when somebody gets into a battery electric or let me rephrase that, an electric drive vehicle, a good electric drive vehicle, is it really changes their perception of what driving can feel like. And it's a very positive change. We've been touting the butts in seats concept. You get folks into an electric drive vehicle, give them an experience, more than just a quick drive around the block, but a couple of days of giving that vehicle a tryout, and it changes their perception of the vehicle. So we're looking at seeing if we can find programs, opportunities to get more people into the vehicles in a longer term test drive, putting the cars in rental fleets, doing loan programs, things like that, to really broaden the exposure to the technology. And it may turn a lot of enthusiasts into believers. I'm not saying all of them. I know there are going to be people forever who want to work with internal combustion engine vehicles, and I don't see that going away.
There's probably two sides to that. I mean, there's car enthusiasts that are collectors that might have cars from the 40s, 50s, 60s, whatever, 70s, not too many from the 70s probably, but those cars are still going to be around. And I think to sort of amplify what you were saying, when you think about some of the most exotic vehicles that are being introduced at the very high end, the Ferraris, the Porsches, a lot of those are going to feature variations on these advanced powertrains, whether it's individual electric wheels at each four, or individual electric motors at all four wheels that allow cars to do amazing things from a handling perspective. I think the enthusiasm from enthusiasts for advanced technology vehicles is going to continue to grow as they see some of these delivering some really exceptional performance benefits.
We have a question from the side of the room. Where is our, oh, there's our mic.
Hi, Jacob Brown, and I was just wondering that price sensitivity on these alternative energy vehicles, whether it's an electric or a hydrogen, seems to be a pretty big motivating factor. I mean, Nissan Leaf sales are down pretty big from last year to this year based on, well, the fact that they're expensive and also that the big initial hoopla is starting to die down a bit. And a lot of our states and our nation, in fact, are fairly indebted, and we're still incentivizing basically tax rebates and taxpayer money being put on the hood of electric vehicles to move them out of showrooms. How long can we keep on doing that?
When we made our amendments to the ZEV regulation back in January, we had a pretty substantial analysis of cost projections for these technologies. And while we weren't able to show that they're going to be cost competitive at initial purchase price, we were able to show that we're looking at an incremental cost that's paid back within a relatively short period of time, obviously not as short as Jeremy's research would indicate it needs to be, but 3 to 5 years for a battery electric vehicle. If you look at the incremental cost of the regulations that we adopted in January, including both the zero emission vehicle regulation and the GHG and criteria pollutant regulations under the ZEV program, the incremental cost of vehicles across the entire fleet, new cars, was about $2,000, and the payback period was 3 years. So if we can get folks to think a little bit longer term in terms of a reasonable payback period, I think we can turn that around. And that was without subsidy. That was assuming we were no longer seeing the tax credit or California's rebates. And there are intangible incentives that help folks make that decision. The desire to drive an electric vehicle, the statement, the experience of driving an electric vehicle, and the performance benefits there. as well as some incentives which don't cost us, like the HOV lane access in California, parking incentives in some cities, things like that.
So I'll add to that because some of our research had looked at the national tax credit for PHEVs and EVs. And right now the tax credit on the national level increases with the amount of energy that's in the battery. Right? However, our research has shown the benefits of electric travel don't increase on a line that's on a similar line. So to maximize the benefit of the tax credit, we have argued that we should not increase it on battery size, but increase it on outcomes. And it might be that a smaller battery plug-in hybrid with a $2,500 tax credit and getting more of those on the road rather than one larger $7,500 EV tax credit in the near and midterm, might be a better use in terms of reducing oil and GHGs and air pollution. But I think we've been dancing around the kind of the larger issue, and we can talk about infrastructure and behavior and attributes, and those are all very, very important. But these vehicles, to be competitive for a wide segment of the population, have to be cost competitive on a capital cost basis. I mean, and we all, no consumer are rational discounters at market rates. I mean, consumers have shown preferences, as Jeremy was saying, is just wanting very, very simple payback times. So the focus to get these vehicles out on the road is to figure out ways to get that capital cost down, as soon as possible. And whether or not that's enhanced tax credits, whether or not it's some focused battery or fuel cell vehicle innovation cluster that's driven to really moving down the cost of batteries. But until we get that capital cost down there, no amount of consumer education and infrastructure and everything else is going to get us where we need to be.